Good day. This is the Eye of the Storm podcast with the big picture technical update for gold, silver, and the US dollar. I am going to begin, here in gold, and I'm going to take a look at my monthly chart. That's where I'm going to start so I can show that biggest picture that I have going on right now. And that is that we, on a much, much larger level, we're looking at a cycle degree, fifth wave up, which should be ending up being very, very powerful. Now, that's going to take quite some time to unfold, considering that the cycle wave 4, which came previous to this, was actually over 20 years. Took over 20 years to unfold in that corrective pattern. And so now we've been in the current cycle degree since about the turn of the millennium, or at least the very fourth quarter of 1999. So we're still within it. So again, it's taking quite some time, but within that pattern, we remain within what I am counting as a primary third wave. And within that primary third wave, I believe that we've just entered into the intermediate fifth wave. Now, how does that all come together? Again, since we're dealing in a commodity, we're in a precious metal, gold is notorious that within its fifth wave, which I have one present right here on this chart, its fifth waves are the dynamic, are the long, are the strongest. Most often in gold, it is that fifth wave that will be the blow-off type wave, will be the surely just reaching for levels higher or lower, depending on the location of where this fifth wave comes in. Right now, we're looking at an intermediate fifth wave within a primary third wave. So bearing in mind that it is going to be the fifth wave that is going to gain the most ground within this whole process. So I just need to make one little change because I upped it, and now I'm realizing that where I had a few areas of, I'm going to leave those in because those fit. It's an ABC down to that 4. But the third was a little bit off. So we have in intermediate waves 1, 2, 3, 4, we're in the fifth. Now I'm going to start coming down off of this because now we want to focus on this fifth wave. So I'm going to look at the daily chart where we can see very cleanly. There's the intermediate wave 4. Within intermediate wave 5, I'm still looking for 5 waves of minor degree to complete it. Those are going to be labeled in this goldish brown, and that is how I label them in a Roman numeral. So I have minor wave 1, minor wave 2. We're inside minor wave 3, which it should break down into its own third waves. 5 waves of minute degree, of where we have minute wave 1 of 3, minute wave 2 of 3. And again, here we are. Now, what we could have completed is the absolute very first minuet wave 1, and then we just put in a minuet wave 2. Now, maybe we're still possibly within a minute wave 2, but I'm kind of looking at this is that couple of things are going to fall into place. I believe that the dollar will begin to decline again, and with a little bit of oomph, some strength behind it. And that, I think, will bring out the buyers back in gold. And this time, if they come in at these levels, I believe they could start buying, and they could push it above 2,000. And what that would kind of give us the thought process of is that, okay, we are now in that 3 of 3 of 3 move, and it should be quite dynamic. So what's going to support that, of course, is that if the dollar continues to really go down, what's also going to support that is if we get a lot of activity in the bond market. So the bonds, the bond market, gold, they will go hand in hand in terms of what they should be doing based on the movement in the dollar. Now, within the Elliott count, if we get into this 3 of 3 move, we can start to look at our larger picture. So I'm going to go back out to my weekly so that you can see what we've got going on here is a much larger count. And that count, going all the way out, is for the third wave, the primary third wave. So that's what I've got lined up. Primary wave 3 So my biggest one I got going on right now, my primary wave 3 will be equal to primary wave 1 at 2007-16. Now we've been over 2000 several times now, but we need to break above 2100 then, of course, to keep on going. Where could that happen? Can it happen within an intermediate degree fifth wave? And would a nice double kind of push from a minute wave 3 and then a minuet wave 3 kind of going together to give a nice strong push? Would that kind of go along with the fact that the interest rates do start to walk their way higher, and we then get the safe haven bill because possibly that the equity markets start to turn lower, so we get that flight to safety bid or the quality bid or storehouse of value bid or whatever you want to call it, the returns to gold based on what's going on in the dollar? So again, we've got a lot of different things kind of happening that could give a boost to gold, since that's the market I'm focusing on. And then if we get that third wave, I'm going to bring it back down out of the stratosphere, which is kind of what that super long-term chart is. We go back down to the daily, and here's what we're looking for. We're looking for more than likely a very quick trip above this resistance at 2078. The standing high of the sequence, which ultimately I would anticipate would be broken, is 2105. Now that's basis the August contract. 2105 basis the August contract. So that I would be expecting to be cleanly broken, if not truly run out of town, so to speak. But two things I want to now add. We have, first of all, where can a minor third wave take us? So we have that, where minor wave 3 would be equal to minor wave 1 at 2173. So we're starting to build an upside picture here. Now I'm going to add one more. These are just the equivalent, but again, third waves with inside this larger fifth should also carry some power. Well, now I got two. I've got the minute 2 and the minute wave 3 and the minor wave 3 in the same area, 2158 to 2173. Now, mind you, I'm just looking for the third waves, but my take on both, and now I want to go in and clean both up, to be honest with you, to the ones that don't make any difference. Oops, that's not it. In terms of the current move. So I put on all the fibs that are actually going to be important to us right now. And I'm going to go change all this because it's more often than not that they are more important. And now I'm going to come down and do the same thing here. And then we're going to quickly move on. Sorry that it takes me so long because I keep forgetting to go in and just change this and make it my, put my new standard in. And I'm going to go down there. And here. Okay, so here are our levels now as we move up. This total outside one is for that much larger wave pattern. Here we have the minor, and then we have the minute. So the minor of the 100 is 21 and 2173, and the minute is 2158. Next up, we would have where minute wave 3 would be equal to 1.618 of minute wave 1, and that's more in tune at 2317. A lot can happen that could really shove gold up there. And then what that would suggest for here is that once we break that 100, we're also looking for the 1.618. So if we get through that with some speed and agility here, then you're going to be looking for this. This is what comes up next, 2317 to 2375, and so forth. We have additional levels going up, and you'll see that they start to spread in terms of price because of the height that we're reaching. So all of that sits as a reality, but a lot has to happen with the economic data, with the overall pictures in this group of the markets that we deal with, right? The equity market, the treasury market, the dollar. and then the balance of our commodities against, but the most importantly, again, I'm going to make a reference to kind of my pecking order. Interest rates sit at the top of the pecking order to me. And then what comes down after that is the currency. For us, it's the dollar. And the dollar, the US dollar, is still, there's a battle going on, but it's still, as of today, the world's reserve currency. So until that apple cart gets totally tossed, the dollar is still pretty widely, held. Wildly as well. In any case, these levels are not, they're technical. And this is the big technical picture. So right now, because of the degree of what I'm looking for, the minor third, yes, we'd be looking for it to be at least 100% to 1.618. Then again, the minute degree, we'd be looking for it to be 100% or 1.618. The 618 numbers, boom, minute already went through it. So it doesn't make any difference. And so did the minor. So those are out. Those are out. And now we go into the next level, and then we go into the next level. All right, over in silver, it actually carries the same message. So again, here we are. And let me go out. Let me see what it looks like here. It might be a little, it's okay. Silver, as strange as it is, this got drawn here, but it's actually the same price as right there. So before somebody says, wait a minute, that's the low. It's like, yes, it was 50 cents lower. And I did make that adjustment, but it stayed right there. In any case, here we are. Same deal, silver. Primary 1, primary 2, we're getting up because we're finishing a cycle degree fifth wave. And actually, this one was 1993. So silver's, yep, it's kind of participates, but sometimes at its own pace. But those fifth waves, right, of this is cycle 3, but there's the fifth wave, right? And here we have a fifth wave. And now we're into a primary third wave and an intermediate third wave. So a little bit different than in gold. But I'm still looking for some sizable moves. I'm back onto the daily. We come back over here, and this is wave 2. And I'm just going to zip out to the weekly. And one more. Go out to my 20-year chart. We can see that there's one, because one failed a little bit, but the fifth wave was pretty powerful within wave 1. And then it was a very long and protracted wave 2. And these have not, I believe the third wave in silver could play catch up all the way down the line. So in other words, the minor third, and this actually needs to come up just a tad to make it look better. The minor third against the minute. So I think the minor 3 has potential. Let's take a look at the daily where minor 3 has the potential to come up to, these are 4. These are the retracement levels for if this wave was not complete, but I'm pretty sure that it was. So if it's a 1, 2, yes, we're in the beginning of 3, and that's actually taking off. But what was questionable is it's like, well, is this 1, 2, 1, 2, 3, 4, 5 of 3, 4, 5 of 3? So we're going to get up towards here, into here, and possibly into here. That is where the fifth wave would come in. Or is it just going to turn out to be 1, 2, 1, 2, 3, 4, 5 of 3, 4, 5 of 3, 4, 5, and that's just going to break down again into another 1. So we get a 1, 2, 1, 2, 1, 2, and then another 1, 2. Or does it keep on going? And we're building internally in a fifth. But maybe we only get up into here. So what I can do is I'm going to change what I have sitting inside all of this. because I don't need those. I'll leave that on, that one on, that on, and add here 2.618 and stick it under this code and see what we get. So in other words, on the way back up, and what I'm going to be looking for is a possibility that the third is going to go. Now, see if I can match these up. And we're going to go from there to there to there. So here we have sort of in the same ideas. So what I'm going to first do is we have that 618 and it's already been taken out. The 100% is right there. I'm going to now remove this. And now we have accordingly for minute 3. Minute 3 would be 100% of minute wave 1 at 2861. So again, how's it going to get there? If I'm counting, if this is just one of 3, then I'm going to have a 1 and a little bit more of a dip, and we're going to go in a third and then a dip and then a 4 and then a 4 and a 5 to finish the minute 3. Actually, no, excuse me, to finish the internal 3 here, and then another to finish this 3, and then another to finish this 3. We got a lot. We can stair step higher. In other words, it's like, and it can get to 2161 and it can get higher. All right. So let me go in and clean up this part now. And again, I will make these my standard. I just got to get in there and do it. That's right here, actually. 2.618. Get rid of that one, put in this one, and do this. And we'll go like that. So on the way back up, we have where minute wave 3 would be, we're looking at it with wave 1, equal, simply because it's supposed to be the longest and strongest, is at 2861. Next up would be this is the level 3235, where I'd be looking for a wave 3 to probably come in. I have additional, let me get it up there, 2.618, and I'll change that color so that it works better. Right there like that. And that's even up at 38. So that's the potential that we have. One more thing, I'm going to open this back. And now I'm going to take a look at the same thing, but to this wave 3. So 100% of minor 3 equaling minor 1, which is not common or anything, it's just there, comes in at 2747. That would be minimum. So one more time on this stuff, I apologize. Just do this over here, like that, like that. So now we have, for the minor, 2747, and then 31,885, 86. And then we get a larger gap because the 2.618s come way up here, 38.2. Yeah, 38.39. And then we're into 618 for the larger, up at 40. So this is potential. Now, again, this is a daily. So this is like midterm. Midterm or long term, then you're looking much higher. But this is what I'm looking for in the precious metals. I think they finally do start to kick in to a long-awaited rally. And so we will see. Now, finally, over in the dollar. Dollar had a late rally, but I want to show you, this is on the daily chart, and that's where I'm going to start. We had 1, 2, 3, 4, 5, 6. Basically, 6 declining days, or actually 5 declining days, that ended up green on the chart because of the way that the market traded. Now we just had a counter trend rally. and every last one of them is red of 1, 2, 3, 4. It makes you think it's a counter trend rally, and possibly it is, but I'm thinking maybe not. So we have the possibility that the dollar is going to just turn and retrace and drop again, right? Because what are we in now? We did an A, B, we're in a C wave, at least of a minor degree. Let me go up one. All right, intermediate wave A. So we're in an immediate B wave down. And it projects, I have to go out even further. Hold on one second. An X and A, B, C. And then if I had to run this thing, we're just going to put in basically fibs, retracements. And 618, where a B wave would be 618 of the A wave, comes in at 98.38. It lines up with another number. And we've been down to 99. So it's not that we're that far away from it. But a B wave actually projects even further. So with that in mind, let me get rid of that. Where are we now in all of this? If we're looking for a 5-wave C, right? 1, 2, and now I'm going to lock out and see where 3 comes in. And here's the picture. I'm going to bring it up, and then I can open it up a little bit. So if we have 1, 2, 3, 4, and now we're looking at 5, and it's going to be 1 of wave 3, just 1, not the whole third, but just the 1 of wave 3. Or if it is all of 3, what can I put in again? Those are retracements. And for going down, the extension's going down 100%, 99, 64, we've already hit it. This is again for the minute third. So what comes up next? Let me just clean this one up so that we know what levels are going to be important versus not so important in terms of this third wave. And what we have going on, 618, what we reached is 100 and we bounced, as it should have. Even if I'm go 1, 2, and this is 3, 4, 5, 1, 2, 3, 4. That's the best I really can do with it. I think that there are some that you might want to, just because it's a 3, 3. The longer term, so this would be an irregular B, but not quite, almost. Regular comes over here. So if this is an ABC, this didn't get high enough. So it still basically really does count as 5. And that counts as 3. So I'm looking for another 5. And that's why I'm thinking in my mind that out of this C wave, I got to take it back out and go like, well, what am I looking for in a much larger picture? And that's why I kind of can come out to here. It's like, well, what do I need to connect? Because essentially, I'm kind of looking for a even larger move to the upside. But I think at first, we're going to come down. I think there's enough negativity going on about the dollar and there's a few, what some of the effects on the dollar have had that could cause the dollar to sink. And if the dollar sinks, as I show on my daily, our first stop is again at 99.60. Ultimately, 96.45. And that's just the 3. We get that 3 going and a nice 5th down. Either that, 1, 2, 3, 4, 5, 1, 2, rally back, do a stronger 3, a 4 and a 5 to finish that 3, and another 4 and a 5. We could be down pretty low. And again, you need to go out pretty far before you're down at levels that haven't been seen since 2008. And then we know the story of why the dollar went down then. Are we entering in that same thing again over here? Look at, is this going to resemble this? Very possible. So we're looking for that B wave down, have a primary B wave up. So we got a lot going on, actually, in terms of, well, what direction should we be taking? Is this all going to be turning itself around and not necessarily being counted out exactly as it is? Is this going to be ABCA and then this very strange type of a B? And then a C, and then we're going to call that an ABC on intermediate degree? Very possible. We've got a lot of possibilities, and I will be continuing to take a look here. But right now, as I can see it, we have a larger B wave down to finish. And that kind of does tell me that here we have an A, a B, and we're in wave 1 of minor C, wave 2 of minor C, we're in wave 3 of minor C, and within it, questionable, but I'm looking for additional downside, initially right there, before we have a little bit stronger of a bounce. But right now, I'd be looking for this to turn, get itself back below 99, or par, as we call it. I think that then gives a boost to the dollar. The market could rally in terms of rate hikes or whatever the degree is there. We might see a pop, maybe not. It's going to go several different ways, because if the economy is not going to be chugging along at all things, it should weaken the dollar. So we got a lot going on. So, but right now, tomorrow, the next week, the short term here in the dollar, I am looking for it to return and to go below 99.660 and work its way down closer to this level. And what I could also probably put in, let me drop this to the 4-hour chart. 1, 2, 3, and then we get up that going. Yeah, I'm not really liking all of this, but if I go here to here, up to, and wrong one. Let me take that off. I don't really like it, so I'm not really confident on doing, I'd have to come all the way down, and this is just showing me that. And I wanted to look internally to see if 3 would be done, but I believe it is because of the strength there. So in any case, looking for it to break, continue. That's where I'm going to finish it up. Thank you very much for listening. And we'll be back hopefully next week with another podcast.